Okay, students, so welcome to this class. So we were discussing the chapter number 8, that is the project appraisal. Okay. So for the discounted cash flow, okay. So this is the first method to calculate. So in the discounted cash flows, discounted method, we have two methods. Number one is the net present value and IRR. Okay. So in the net present value, so what to do? We calculate the present value of all the cash flows. Present value of all the cash flows. For that we need the following information. So we need initial cost to be invested in the project. Cost of capital is the rate. Annual cash flows over the time, and if residual value given in the questions, we make it take this, otherwise we may ignore if there is no residual value given in the question. Okay, and this is the work example we are going to solve. Okay, so this is the project 1 and project 2 as per the previous example. So the requirement is net calculate net present value of each product where the cost of capital is 8%. Okay, so now we are going to solve this question. So this is the cash flows, 20, 2 lakh, 210, 220, 240 is the cash flows. So this is the cash flows. Okay, and then now we are going to calculate the present value. Okay, so first of all, this is the year. Here is the year. Then we have the project 1 cash flows. Okay, so this is the uh, discounting factor, we can say. Discounting factors, and this is the present value. Present value. Okay, so for example, for the year 1, cash flow is 200,000. So, okay, so now we are going to calculate the present value at the year 0. Okay, so for example, at year 0, this is the cash outflows. So how much invested? So in project 1 we invested 730,000. Okay, so 730,000 is the cash outflow because we invested 730,000 in the investment. Okay, so there is no discounting because at time 0 there is no discounting, so present value is still 730,000. So for the year 1, so year 1 cash flow which we earned 200,000, so 200,000. Discounting factor is 8%, so project discounting factor is 8% per annum. Okay, so 1 plus 8% means 0.08 to raise power minus 1. So this is the discounting factor. So when we multiply cash flows with the discounting factor, we get the present value. Okay, so equivalent is equal to 200 into 1 plus 0.02 raise power minus 1. So yes, what is the amount which we get? Yes, it will be the 185185. Okay, for year 2, present value is cash flow is 210,000. Okay, so 210,000. So discounting factor will be the 1 plus 0.08. Now it it will be discounted from 2 year to 0 for 2 years. So power minus 2. Yes, so answer will be the this multiplied by this equal to present value. So now we take, when we take the to 10 to raise power minus 2, so answer will be the 180, 1800, 1800, 41, 41. Okay. So now for year 3, 220,000. So discounting rate will be 1 plus 0.08 to raise power minus now 3, because now we will discount from year 3 to 0. So present value mean we want to go to the today at year 0 mean present value. So 220 and year 3 answer will be 1746, 1746, 174643. Yes, are you getting my point? Okay, if you know how I am calculating, so now by using the calculator, so you can easily do this. Okay, so for example, 220,000, okay, multiply by 1.08 to raise power minus 3. So now here we get it 174643. So 174643. Okay. Okay. So for the year 3, 240,000. For the year 4, 240,000. Discounting rate is the 1 plus 0.08 to raise power minus 4, and the answer will be yes, 176407. 176407. Okay, so now calculate this one. This is the negative value, this is plus 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 plus, then we will get the net present value. So this is the my, this will be the my final answer. Okay, so minus 730 plus 185, 185, 185 plus 1800, 41 plus 174 643 plus 176407. So now we'll get the negative 13724, negative 13724. So this is the negative net present value. Yes, get my point. Okay, negative 13,724, 13,007, 13,724, but here will be the 13,750. So there is some rounding difference in the book answer and our answer. Okay, so you have to follow the same steps. Now you have to solve the net present value for project 2. So okay, so yes, can you do this? Okay, so you have to perform the same procedure. Okay, then you will get the net present value will be, your net present value will be the 88965, but maybe the answer will be near to this amount, not exactly same, because they are using the discounting factor in rounding form, but we are using this counting factor in full form. Okay. Okay, yes, any problem in this? Okay, so for example, if the project 2 net present value is 88965 and project 1 is 13750, so as per the NPV, both projects are not feasible, both projects are not favorable. Okay, but which one is least which one is least, you can say, bad, or you can say which one is uh, least unfavorable. So project 1 is least unfavorable because the negative value is 13, but in project 2 the negative value is 88,000. Okay, so this project 1 will be the least unfavorable. So this was the example of net present value. Okay, so now again work example. This is the question, cash inflows and cash outflows. First of all, you have to calculate the net cash flows. Okay, so net cash flows, and this is the discounting factor for year 1, 2, 3, 4, 5 years. Okay, so what to do? So you are going to calculate the net present value. So your net present value is 73060. Okay, so for example, cash inflow 5 lakh, cash outflow 3 lakh. So net cash flows will be the 2 lakh. Okay, in this case, so outflow is 8 lakh we invested into the project. Cash inflow is 5 lakh minus outflow is less than, so equal to net cash flow in positive value. Okay, so this is the net cash flow. Okay, so you are using the net cash flow, then apply directly discount factors. So this is discount factors. Okay, so then you will get then you will directly get the present value for this one. Okay, don't move to the don't calculate the accumulative, we don't need this. Okay, so when I get the net cash flow, so instead of accumulating, I directly apply the discounting factor. For the year 0, no discounting factor, no discounting factor. For the year 1, discounting factor is 0.952. Okay, so multiply by 0.952, then I will get the 190,400. Check this, is this coming or not? Okay, so this is the correct one. Then for the second value, we will apply the second discounting factor. Second discounting factor is 0.907, 0.907, and this discounting factor that we are applying, so this is equivalent to 0.907 is equivalent to 1 plus the discounting factor was 5% in this case. So 0.05 to power, so this is the discounting factor for year 2 to raise power minus 2. So these both are approximately equal. Okay, so then we apply the discounting factor, then we get the present value. So this is the present value of cash inflow, this is the present value of cash outflow. So when we total this, obviously we get the 37060, because this is the negative value, this is the positive, and this is the negative, so minus plus. So ultimately we get the positive value of 37060. It's mean at 5% discounting factor is 5%. At 5% project is favorable. Yes, getting this point or not? You get this point? Any problem in this? Okay, so this is the work example, and additional information is uh, just a minute. Okay, so this is the example. In this work example, cash inflow and outflow must be calculated using NPV and accounting or average rate of return. Okay, so power from sun is a new business startup planning to generate electricity from solar farm. It has agreed to purchase land, so this is the investment, cost of investment. And the and operate the solar farm for 5 years, so this is the number of tenure to be invested. At the end of this period, it will sell the land and equipment for 2.4 million, and this 2.4 million is the residual. Okay, it's mean uh, the investment which we will do at the end of 5 year. So uh, we invested 3.3 million, but at the end of 5 year we may recover 2.5 million from our investment. Okay, additional information: sale in year one, sale in year one are expected to be 4 million, so this is the cash flows. And 2 to 4 year, 1 million cash flow. At 5 year, expected to fall by 5% from the previous year, so it will be the 1%, 1 million. When 25% decrease, so the remaining will be the 75%. So we 1 into 7, fine, so it will be the uh, 0.75 million, 0.75 million. Okay, okay. Running costs include depreciation, so for the year ones per week depreciation, so the 52 weeks. Okay, cost of capital will be the 6%. And here is the discounting factor. So now you are going to calculate the net present value, NDRR. Okay, so this question is your homework, so you can do this. It's not a big deal to handle this question. Yes, can you do this, or may I help you to solve this question? So first try yourself. First try yourself. Okay, so first try yourself. So, and if you feel difficult in any point, so you may ask. Okay, otherwise I will solve this question. Okay, so advantages and disadvantages of net present value. Advantages of present net present value is: consider the time value of money, recognizing that £1 received in future has less value than £1 on present value. So net present value, so we consider the time value of money. All cash flow used in the calculation of net present value. So in net present value we use all cash flows. Consider the timing of the cash inflow and outflow, with greater importance being placed on early net cash flow. So the timing of the cash received and cash out is important in the net present value cash flow. Either we are receiving the cash flow for the larger number of year, or for the less number of years. Disadvantages for the net present value: cost of capital used to determine the net present value may be difficult to set. So it's not easy task to calculate the cost of capital. In our level, cost of capital normally given. In our level, cost of capital normally given in the question, but when you study the advanced level for the project appraisal, so we used to calculate cost of capital by using the different calculation, by using the equity and debt ratio. Estimate of cash flow may be wrong. This apply to all method, especially in later year. Maybe estimation of cash flow sometime may be wrong. Cost of capital may change over the life of project. So cost of capital never remains same. But in net present value we assume, so cost of capital will be the same. Okay, this is the case study activity 3, Aziz aggregates. So this is again your homework. Okay, so what to do: year 1 to 5, inflow both location, outflow of location A, outflow of location B, and 6% discounts. Okay, so cost of capital is the 6%. So cost of capital is 6%. The cost of location A is 24 million, so this is the investment cost, and the cost of location B is the uh, 18,000. So this is the investment in location B. Calculate the net present value of each location. So we have to calculate the net present value of all location B. Okay, and state which location should be chosen. So which are stated best. Okay, so for this calculation, so this is the inflow we add the inflow, outflow we subtract the inflow, then we get the net cash flows. Okay, so we write the net cash flow here, we write the net cash flow, net cash flow, net cash flow, net cash flow, and then for the net cash flow we apply the discounting factor and then calculate the net present value for location A, and same process will be repeated. 11.1 minus 5.6. Okay, so we may calculate the uh, present value, net present value of the location B. Okay, so this is your homework. So I think so it's enough for today. So you must do the all the activities questions. So in the next class we will discuss the problems related to the net present value, and we will solve the what is the IRR. So this will be discussed in the next class. Okay, get my point? Okay, okay, so it's enough for today. Okay, thank you so much, take yourself.